Broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, Ron here at AbleTrend. Welcome to the webinar. We'll go over the charts and look at the signals from today. We'll look at some recent signals. I've got an S&P 500 chart up here, which is the stock market. So everybody, of course, wants to know what's going on there. As most people have retirement accounts and 401ks and all of that. So let's take a look. Take a look at the S&P first, and then we'll take a look at the intraday. Look at the mini NASDAQ. Really good day today, intraday trading using the AbleTrend signals. So let's jump in and see. We always use a guidance chart. We use AbleTrend TS on the lower time frame. We use AbleTrend 3 on the higher time frame. And this is a daily, weekly S&P 500 chart. So we're going to take a look at the market here. And it's always the same colors and dots, same signals. So we just have to have 3 indicators agree, triple confirmation before we make a trade. So, we obviously had nice triple confirmation right there. Downtrend, this was back in December. And then, of course, we had a nice little uptrend over here. Now, with the S&P or with the daily and weekly charts, you want to put your stop loss on the previous lower small blue dot. And we'll take a look at the buy signal right here so that I can move along here. That's a perfect triple confirmation sell signal. You got blue bar, blue dot, blue X. Stop loss is going to go on the bottom of that first blue bar, just a little bit below. I always say 2% for stocks and ETFs. So whatever the price is, because the prices are totally different, every stock has a completely different price. I'll put a little 2% below the bottom of that bar there, and this thing, of course, took off very nicely. We know January and February was very good. Now, stop losses. A lot of people say, where are my stop loss? Put it at the previous lower blue dot. Here's a good example. When the price was here, there's a blue dot below. There's where you put the stop loss. Second level of dots below the price. 2 rows of dots, or second step down. If you want to look at it like steps, like you're walking up steps, 2 steps down. Stopped out here. Clearly we were stopped out there, but now AbleTrend had the buy signal, all clear for the market. 26.20 was the price. Out over here at 27.40, that's a sweet little trade right there. And then here's your sweet spot. Triple confirmation. If you get stopped out on any chart, whether you're looking at a mini NASDAQ, whether you're looking at a corn chart or the British pound or crude oil, it doesn't matter. Bonds, Apple, Netflix, meaningless. Intraday, swing chart, position trading, 3-minute, 9-minute, 120 daily. When you get stopped out of a position, which is fine because the key with AbleTrend is your stop management. Keep moving those stops higher in an uptrend. Keep moving them lower in a downtrend. It's protecting your position. And the key is not to put it too far. That's why we have that down pat. Not to put it too far away, because then if it pulls back, there's a lot of give back. But at the same time, you want to put it too close either, because any little pullback, you wouldn't want to get stopped out here and miss this big run right here. So if you get stopped out, you just get right back in again on a sweet spot. A sweet spot is a pullback back down to the blue dots. The prices touch support. Or if it comes within a tick or two, that's fine. And then the bar goes back to blue. The next blue bar. We only buy on blue. We only sell short on red. That means the odds are greatly in our favor. The algorithm likes what it sees. You just get right back in again right there. Stop loss back at the same spot. Second lower blue dot. There's a blue dot right there because you can see there's a whole row of dots. So it's right in the middle of the dot of the bar, and then we just put it at the next lower small dot. And we're still in that position right now. So that was in at 27.83, and we're at 28.79, 110 points higher in just a month using AbleTrend signal. Stop loss will be right here, and you can trade ETFs. Or you want to just see what should I do with my long-term money? Well, this is what you do. Use AbleTrend's accurate buy and sell signals on this guidance template daily, weekly chart for your longer term positions, because when the S&P is going up, most stocks are going up, and vice versa. So stop loss will be right here at about 28.20, and looking good. We'll stay in it until we get a red bar, or until it, if it should shoot down and take about a 60-point drop at any time in the near future. Well, we'd have a stop loss there. But as the dots go higher, the key with protecting your profit and making money is to put those stop losses in the right place. Stop loss management is the most important thing, because the signals are excellent. I mean, really excellent for entries. However, it's not always going to be right. It's going to be losing trades. I can guarantee you that. And there's certainly risk in trading. So if you put your stop loss just at the right place, that'll really make a big difference. Especially when we're looking at an intraday chart, because we have a lot of day traders who like to intraday trade with AbleTrend 1 minute, 3 minute chart. Very popular for that, if that's what you like to do. Doesn't mean it's the only thing it works for, because I can guarantee you it works just the same for long term. It works just the same for futures and forex and any market in the world. We have clients all around the world who use it in their country. So it came in quick, but right at the opening bell, blue bar, blue dot, blue X, just like we look for. Stop loss goes for NQ 1 point under the first blue bar with the triple confirmation. If you're trading ES, half a point. If you're trading the Russell Index, 3 ticks, 3/10 of a point or 3 ticks. $30. $30 below the bottom of the bar. And in this case, it's 1 tick, which is $20 lower than the bottom of the bar. That one took off very nicely right away. Quick one, tough one to catch because it was right at the beginning. So it wasn't an easy one to catch. You had to really be kind of, ready to go. And we always go in at market. We always, buy on market and we sell short on market. We don't fiddle around with limit orders and then it's gone. And that worked out, worked well. But again, the key is to keep moving your stop losses higher, protecting your money. We don't want to have a lot of give back where it shoots down and we give back a bunch. It's always going to be some. It's not possible to pick tops or bottoms. Complete impossibility. And we have to just get lucky to do that. No way, and nobody in the world can do that consistently. We're not trying to. Just want to pick up the bulk of the trend in the middle, keep things low risk that way. Here's your stop loss again goes on the previous lower blue dots. Once the dots go past where you got in, or where your stop loss is, I should say, now we can move the stop loss up higher here, and we move it there, and then there. You just keep moving it high. We got as high as here. Remember, not the blue dots below, the second lower row of dots, or in this case, dot, because there's 1 dot there. Now we've got 2 green bars, so we can move in maybe a tick or 2 higher. Now we could even, again, 2 green bars come up. Now we can move it like right up in there, and then we got taken out when the price dropped right there. However, that was a nice little trade right over there. Let me zoom in a little closer. We be with the open of the next bar. Once you have the triple confirmation, we're long on the open of this bar here, the next bar, that small little blue bar there. So we're in at 77, and we're stopped at 87. Hey, $200 on the first trade of the day in 30 minutes. Again, tough one to catch. Perfectly fine if you didn't. You had to really be ready for that one. Drew, what would you be a suggestion for the time frame to day trade bonds? Yeah, 3.9 would be minimum, Drew, because bonds don't move anywhere near as quick as mini NASDAQ. 3.9, yep, that'd be fine. Any of the slower, the next step up, slower markets. Eric, do you enter sweet spot on a short if the candle closes over the small red dots? Let me understand what you're saying here. Do you enter on sweet spot? Tail touches tail. We don't use tails. That's why we never use candles. We use open, high, low, close. But that's okay. It's the same. That's not going to matter. Do you enter sweet spot if the tail touches the small dots, or do you need the candle to close on the dots or further? Oof, I got to think about this, Eric, because I'm not really sure what you're asking there. It's so hard through through texting or through email, when you're talking about technical trading questions. Let me just try one more time. I'm just not sure what you mean. Do you enter sweet spot on a short if the candle closes over the small red dots? You have to have let me keep it simple. Here's a sweet spot. Right there. That's a perfect sweet spot. There's no other way to do it. It's this way or no way. Red bar, red dot, red X. The price, the 2 bars before it, hit the red dots, bounced off of it, and went from green back to red again. At the close of this red bar, or the open of the next bar, we're in. So, as simply as that. How many ticks you tolerate away from the small dots? We get in on every sweet spot, Eric, and we get in on every first bar. You don't have to calculate how far the price is from the dots. We did away with that many, many months ago. When you see a sweet spot, you're in. Done. That's it. I mean, you're in. Stop loss goes on the previous higher red dot. You say, well, wait a minute, there is no previous higher red dot. Then you put it 1 tick above the red dot. Now, if you say, well, that's too far away, or let's say the price is way down here and is way below the red dots, then just put your stop loss 1 point above the top of the red bar. The same way we did over here, 1 point above the top of the red bar. Okay, the same way we did it when we got into this triple confirmation short trade, 1 point above the top of the red bar. Hope that helps. For any more technical questions, Eric, it's probably better just give me a call in the morning, and we'll, I can go over to it much easier. So the ES opening, I didn't look at ES. I was looking at NQ. Yeah, so on the NQ, and I don't have the ES chart up at the moment, but the NQ or the ES, doesn't matter, whatever it is, if you have a blue bar and a blue dot and a blue X, it's always the same rule. We don't change that. It would go a 0.5 point on the bottom of the blue price bar. If you do an NQ, 1 point. Yeah, Cheryl says you believe the original entry was over 10 points. That's okay. It's the first entry. We're still in. We're in on that trade, and it was a really good day today, as I'll show you. We'd still be in on that trade. Beginning of the day, we're in. We're in on that signal. That's okay. It's perfectly fine to still get into that trade. And if for any reason you weren't up at that time, you missed it, whatever, we had a really, really big winning trade, 25 points profit on the second trade of the day. Red bar, red dot, red X, and this AbleTrend signal, perfect, beautiful. Keep moving your stop losses lower as the red dots go lower. Then the stop loss goes 1 point above that green bar. We do not get ticked out there. And then we do get ticked out here because it goes 1 point above this green bar right here. And we got ticked out there. That was a 25-point winner. $500 in 10 minutes. 20 minutes. Using AbleTrend signal right there. That was sweet. That was a good one. That was the big one that did. Usually get one good one a day. Yesterday was a good day. We were about 20 points profit on NQ, and today we're about 30 points profit on NQ. That's 50 points in 2 days. That's $1,000. Monday and Tuesday, not so good. Choppy. But, pick up $1,000 in the last 2 days trading one lot. Pretty good. That's why you got to stick with it, because every day's different. Just don't know. Robert says, what if the open of the next bar is green? Doesn't matter, Robert. You're in. You're in at the open of the next bar, regardless of the color. Many times it is. But the bar before it already had triple confirmation. So the open of the next bar, you're in. Jim says you don't see trend sig. Now, we took trend sig off a couple months ago, Jim. There's nothing wrong with it. It just didn't add a lot to it. And I like to keep the charts as clean and as easy as possible. Steve says 3 green bar stop loss. You can use the 3, Steve, but for NQ, which is definitely a lot faster, we've been using 2. You can use 3 on ES, whatever you're comfortable with. But you just have to stick with whatever you pick. You got to stick with that the whole day. You can't flip-flop back and forth, because that's when you second-guess yourself. If the close is above the dot, is it a no trade? If the close is above what dot? No, I mean, if you're referring, Cheryl, to the first red bar, like right here, like I pointed out, or the first blue bar, or this one right here, doesn't matter where the dot is. If you have a blue bar and a blue dot and a blue X, or a red bar and a red dot and a red X, at the close of that bar, you're in. And the first trade of the day, I mean, if it's 10 points or if it's 11 points, that first trade of the day is, you don't want to miss that one. Very often, that's a good one. And if it doesn't, well, we'll get the whole rest of the day to catch up. So, yeah, we had the big winner here. Here was a losing trade. We gave back about 3 points. I mean, it was a small loser, but it was a losing trade. 3, I'll stretch it to even 4, because I like to exaggerate on the losses. And then we had this just textbook perfect sweet spot right here. That worked out okay. We picked up about 10 points on that trade because we were stopped out right there. 1 tick above the higher of the 2 green bars when you're trading NQ. You can use 3, that's fine. I'd use 2 for NQ. You can use 3 for ES, RTY. They're a little bit slower. I like 2. Now you're not going to nail it perfect every time, so put that in your head already. But 3 is fine also, because they don't move quite as quick. Some people don't want to get in and out as quickly. Perfectly fine. Slightly different result you'll have. Some days a little better, some days a little worse. But in the long run, it kind of evens out. Drew, how is your tweak you mentioned Tuesday coming along? Coming along, kind of interesting. Drew, got a couple more weeks of testing, but I'm always constantly. I mean, I literally spend hours a day, looking for little tweaks to just, if we can eliminate a losing trade a day, I feel, on average, say $100. Let's just throw that out there. If you can eliminate 1 losing trade a day, I mean, that's $500 a week. And, there's going to be about 10 trades a day. You're going to certainly going to be, multiple losing trades per day, obviously. So I'm just saying, if you can I always try and eliminate 1 per day. I mean, that would just be unbelievable. If you did 2 or 3 a week, you'd be saving $200-300 a week. That's $1,000 a month. So I'm always looking for those little tweaks. Good. Thanks for checking in on that. Steve, do you use a mechanical stop loss placement or mental stop? Absolutely. You put the stop loss in, Steve. It moves too quick. Not a mental stop loss. On your dome, all you have to do is click on the price, whatever broker you're using. You just click on the price, and the order goes in instantly. And then you can slide it up or slide it down, whether you're long or short, to move that stop closer and closer to the price. The whole key when you're looking at a chart is like, how can I move my stop loss closer? I'm always looking at going, oh, come on down, red dots. So we can put our stop loss a little bit. Then if I get 2 green bars, I hate when it's like this, a green bar and then another higher one. I love when there's like 2 together, because then you put your stop loss just a little bit higher, and it's like, wow, now I'm locking in my profit. Now I can't lose. Now I have to make, in this particular case here, $100 on this trade. So, that's what you look for. And actually, this was a $200 winner right here. So we had a 25-point winner, which is $500 winner. Then we had a $200 winner. Real clear cut, real simple as far as the indicators are going. There was nothing to think about or get fooled on, or sometimes it's tricky. Moves. You got to just think a little bit. It's moving real quick. These were 2 real simple, easy, $500 winner and a $200 winner that AbleTrend gave. Losing trades too, always will be. Here's a sweet spot. Only lost about 3 or 4 points on that trade, but gave a couple points back there. That's a valid sweet spot after we got stopped out. The prices touch the red dots right here. Now when they're green, I'm looking to say, okay, come on, red bar. I'm looking for, if a red bar shows up, you got to anticipate. That's the key. You got to anticipate when you're watching what could happen? If this happens, what am I going to do? Well, if I get a red bar, I'm going short. Obviously, it's going to take a long time for me to get a buy signal because you got these red X's way above here. So, you got plenty of time to think about blue bar, blue dot, blue X. That's not going to come in for a while. It can't. The red X's are too high. So when you're looking at this right now and you got red X's and now you hit a sweet, now the prices hit the red dots. First thing I go in my mind is, okay, well, red bar, red dot, small, I'm going short. I'm going short against sweet spot. So you kind of got to like anticipate it. Rick says, can you add to an existing position? I wouldn't, because these trends don't last that long. You certainly can if you like, Rick. It's just personal preference. So there's no right or wrong answer. It's like, vanilla or chocolate. What's better? There's no right or answer. It's just personal preference. I wouldn't, because the trends don't last. When you're day trading, they don't last. Now, you do more longer term, like daily, weekly charts, yes. Yes, for longer term position like retirement accounts and stuff, yes, I add on the sweet spots. Because those trends could go on for months at a time. But not for that. Not for intraday day trading, because as you can see the chart yourself, I mean, it's up down all day long. It's it's a yo-yo all day long. So I think that'd be kind of risky. And I always lean towards lower risk, conservative and lower risk. That's certainly me. Triple confirmation trade right there, and then we would be stopped out right there. So maybe 2 points loss on that one because we're in over there. Yeah, right around 2 points. Sweets now. Okay, now when you're watching this live, okay, I see all these green bars. I mean, you got the red X above, you got the red dots. All you need is a red bar. So when you're watching this live, I'm thinking red bar would be a sweet spot to go short. So you're watching this live, and I'm just speeding it up. But this is exactly what you see. Boom, there we go. Close of that bar. Wait for it to finish. Sweet spot. Short at market. And that started out nice, but then we were stopped down here. So only made a couple of points on that trade. But that's what you're looking for when you're watching it live. I actually kept on going. Oh, here was a sweet spot right here. Now, this was 12:31. I mean, if you got a sweet spot or any kind of a trade, 1 minute into the dead zone, you got to take the trade. I mean, you're within minutes, one way or the other. It doesn't have to be 12:30 and 1 second. I mean, you got to give a tick or two one way or the other. And actually, we were stopped out right there. So, we only picked up a couple extra points on that trade. So no big deal. This was your dead zone right here, and it was pretty dead after that. What's also nice is the no trade zone kept us out of a choppy mess there, that every other indicator in the world that's not AbleTrend would have probably lost during that choppy mess. No trade here. That's still in the dead zone, but there's your first trade a little after 2 o'clock Eastern, and that was another really good one right there. We were finally stopped out right here on this previous lower blue dot. The 2 green bars came in here, but the stop loss right there never hit the stop loss and kept on going higher. Well, that was a really good trade right there. 54, and we were out at 67. Nice, 13 points. So we were up about 40 points at that point. That's about $800. Drew says, he made 600 today from NQ and 300 from RTY. Thank you. I'm just trying to read that. Thank you for your guidance every week. You're welcome, Drew. I like what I do, and I'm glad I can help. Thank you for saying that. Eric says, do you use the Bollinger Bands for entry or exit? We haven't been using the bands for a couple of months now at all, Eric. No, I mean, unless you're trading a lot of contracts. Again, trying to keep that chart cleaner, neater, only what's very necessary on the chart. Steve, if you get back from the dead zone, no trade period, and there is a retest that is developing, would you enter? Yes. Here's a perfect example of what you just said. Here's 5 to 2 Eastern now. Comes back down, hit support. So I'm thinking right away, okay, blue bar, I'm in, because now it's 2 o'clock. And again, if it's a couple of minutes before or a couple of minutes after, I mean, we're not going to get, super technical and get, crazy over minor technicalities. So right away, when you watch this live, the green bar, I'm just saying to myself, well, I got blue dots and blue X. So, the next closest thing would be blue bar. And then, there it comes in at 12 after, 12 after, 11 after. And then that took off, and that was a good one right there. And then had a couple small little losers at the end of the day. Just taking a quick look at the chart. That was a losing trade right there. Again, 3 or 4 points, but, it is what it is. And then it was another small loser. Small, but, it was a loser. Yeah, there's your triple confirmation there. And again, it was 3 or 4 points. It might not have even been that, but I'll stretch it out to 3 or 4 points. So on the day, it was a really, really super day today. I wish every day could be like this, but it's not. I hate those. I hate those choppy days, but gotta stick with it, and that's the hardest part. Especially if you have a rough day or a couple of losses in a row. The hardest part of trading, whether it's AbleTrend indicator, any other indicator, your own indicator, or anything else, you gotta stick with it, because if you don't, what's going to happen when you miss one. That's going to be the big winner. And there's usually only one good move, although today it was like 3 good moves, so that's why today worked out really well. If you quit from the beginning of the week when it was choppy, you look back and go, oh man, I should have kept going, because yesterday and today were 2 winning days. More than made up what we lost on Monday, and now we're way ahead for the week. So, we'll see what tomorrow brings. Who knows? But you got to stick with it, and that's the hardest part, because trading's mental, but that's the only way you can be successful. All right, I think I hit all the questions, went over all the charts, the buys, the sells, the stop losses, stop management, which is the key. Hope I was helpful. Always glad to help anytime. You can call or email during the day. I'll be here to help. Thanks for being here, and have a good night, everyone.